maybe the children will have $2 instead of $30, and maybe the $2 will cost a couple of bucks more than they would normally.
After weeks of silence, China has finally spoken, and the world is listening closely. In a carefully worded statement, Beijing said it is evaluating the Trump administration's outreach on tariffs. But behind that diplomatic language lies a tense economic standoff with global consequences. Is China preparing to negotiate, or are they stalling for leverage? What message is this sending to U.S. businesses, global markets, and political rivals? Because when the two biggest economies in the world go quiet and then break that silence, it usually means something big is coming. Let's unpack what this really means. After weeks of silence and growing speculation, China has finally broken its silence on the Trump administration's outreach regarding trade tariffs. The statement, issued by the Ministry of Commerce, was brief but significant. China is currently evaluating recent communications from the United States related to trade and tariffs. On the surface, this may sound like diplomatic filler, vague, cautious, and non-committal. But in the world of geopolitics, especially when it comes to U.S.-China relations, every word is intentional. Let's start with what was said. The use of the word evaluating signals that China is not ignoring the U.S., nor rejecting discussions outright. It leaves the door open, showing Beijing is at least considering re-engagement. It's a strategic pause, a moment to gather internal consensus, assess leverage, and observe how Washington behaves next. Now, let's look at what wasn't said. There was no mention of tariff rollback, specific economic concessions, or even a timeline for future talks. There was also no direct mention of Trump or his administration, a diplomatic choice that keeps the conversation impersonal. This kind of ambiguity allows China to maintain control. By saying they're evaluating, they acknowledge the situation without locking themselves into any response. It's a classic negotiation tactic. Signal interest without giving away power. Why this response now? Analysts believe pressure was building internally and externally. On one hand, China's economy is facing its own set of challenges, from sluggish consumer spending to declining exports. On the other, the global business community was watching closely, waiting for any clue on how China might react. By choosing this calculated language, Beijing accomplishes three things. 1. It avoids confrontation. 2. It shows measured leadership. 3. It buys time without appearing weak. So while the statement was only a few lines long, its impact is already rippling through diplomatic circles and global markets. The world asked China to respond, and they did, in their own careful, strategic way. The big question on everyone's mind: why is Donald Trump reopening the tariff conversation with China now? The timing isn't random, it's strategic. First, there's the economic backdrop. The U.S. economy recently contracted by 0.3%, marking its first decline in over a year. While not yet a recession, it's a warning signal. Consumer spending has slowed, business investment is shaky, and inflation, though cooling, remains a key concern for households. Trump knows that in this environment, messaging around protecting American jobs and industries carries weight. Second, this move is deeply political. Trump is entering a critical phase of his re-election campaign. Tariffs were one of his signature policies during his first term, a way to demonstrate toughness on China, appeal to blue-collar voters, and shift the national conversation toward economic nationalism. By reviving the topic now, Trump reactivates that powerful narrative. But there's more. This outreach may also be a tactical test, a way for Trump to gauge how far China is willing to go to stabilize trade relations. If Beijing responds positively, it creates an opportunity for Trump to claim a diplomatic win. If not, he can fall back on a familiar strategy, portraying China as uncooperative and using that to justify harsher policies. There's also pressure from American industries. Manufacturers, especially in automotive and electronics, are wary of further disruptions to their supply chains. Many are quietly lobbying for stability, not escalation. Trump, always attuned to business sentiment, likely sees value in reopening dialogue to cool rising tensions and reassure markets. Finally, this outreach puts the Biden administration in a difficult position. If Trump appears to be making progress with China, it forces current officials to respond, or risk looking passive on a major international issue. In short, Trump's move is a blend of political strategy, economic calculation, and global positioning. He's not just reaching out, he's setting the stage. Whether it leads to a breakthrough or a new standoff, it's clear the tariff battle is far from over. Global markets are always quick to respond to uncertainty, and China's cautious reply to Trump's tariff outreach is already making waves. Immediately after China's statement, U.S. stock markets reacted with mild optimism. The S&P 500 and Dow Jones both saw modest gains, reflecting investor hope that renewed dialogue could diffuse rising trade tensions. However, the enthusiasm was far from overwhelming, more of a wait-and-see posture than a full-throated rally. Asian markets were mixed. While the Shanghai Composite ticked up slightly, markets in Hong Kong and Tokyo remained flat or slightly negative. This split reflects a key reality. While a thaw in U.S.-China tensions could help exports and trade flows, investors remain cautious about deeper structural risks in both economies. Currency markets also responded. The Chinese yuan briefly strengthened against the dollar, a sign that traders see a lower risk of immediate escalation. A full-blown tariff war tends to weaken the yuan as investors flee to the relative safety of the U.S. dollar. But China's diplomatic response gave reason for restraint. Commodity prices, particularly industrial metals like copper and aluminum, also saw a slight rebound. These materials are often used as a bellwether for global trade health. If markets expect cooperation, demand expectations rise, and so do prices. However, financial analysts warn that this calm is temporary. The key word, evaluating, suggests no guarantees, and investors hate ambiguity. If China delays its next response or rejects further talks, markets could quickly reverse course. For now, traders are hedging, they're positioning for both outcomes, a breakthrough or a breakdown. The next headlines from Beijing or Washington could send the markets soaring or tumbling. While diplomats trade words and politicians posture, American businesses are stuck in the middle, once again facing the fallout from U.S.-China trade uncertainty. For manufacturers, the risks are immediate. Many rely heavily on Chinese-made components, machinery, or raw materials. Even the mention of new tariffs or policy shifts sends them scrambling to adjust sourcing strategies, renegotiate contracts, or delay expansion plans. Retailers are also feeling the pressure. Companies like Walmart, Target, and Best Buy, all of which import large volumes of goods from China, are preparing for potential cost hikes. If tariffs are reintroduced or expanded, they'll be forced to make tough choices: raise prices for consumers, eat the extra costs, or find alternative suppliers in a global market already under stress. Small businesses are especially vulnerable. Unlike large corporations, they lack the financial cushion or global supplier networks to pivot quickly. For them, even a 10% tariff can make the difference between profit and loss. And then there's the tech sector. Firms like Apple, Dell, and Intel still depend on Chinese factories and assembly lines. Any disruption could delay production, limit inventory, and hurt quarterly earnings. What makes this situation even more difficult is the uncertainty. Businesses don't know whether this evaluation phase will last days, weeks, or months. They don't know if tariffs will return, change, or vanish entirely. So, many are choosing to prepare for the worst, stockpiling inventory, revisiting supply chains, and holding off on major investments until the picture becomes clearer. In this trade chess match between two superpowers, it's U.S. businesses that are being forced to make risky moves without even knowing the rules of the game. With China now evaluating and Trump reigniting tariff diplomacy, the stage is set for a tense and complex next chapter, one that could shift global trade, markets, and political narratives all at once. For China, the move is about leverage and timing. Officials in Beijing are likely weighing several questions. Does it make sense to engage with Trump now or wait to see the outcome of the 2024 election? Can they extract any economic concessions in return for cooperation? And perhaps most importantly, how will any move be perceived at home? In typical fashion, China may choose to play the long game, issuing no immediate follow-up, maintaining ambiguity, and watching how the U.S. economy and politics evolve before committing to talks or countermeasures. For Trump, however, the timeline is much tighter. With elections approaching and economic uncertainty rising, he needs action, or at least the perception of it. A renewed tariff battle could rally his political base. But a breakthrough, even a minor one, would allow him to claim victory on the global stage. Meanwhile, global markets, businesses, and allies are in limbo. The European Union, Japan, and other trading partners are closely monitoring the situation, adjusting their policies and preparing for ripple effects. The next 30 to 60 days will be crucial. A diplomatic misstep, a harsh statement, or even a delay in communication could reignite tensions. On the other hand, a quiet behind-the-scenes dialogue could cool tempers and reopen trade negotiations. In this high-stakes tariff chess game, every move is being watched, and the world is waiting to see who makes the next one and whether it will bring resolution or escalation.